Peter Schiff, Chief Market Strategist at Euro Pacific Asset Management, is back with us to talk all things the economy, the election results, and Bitcoin. I know that's your favorite subject, Peter, but I'm going to save that for the last bit because the big news item of the day is Biden's stimulus plan, $1.9 trillion. First of all, congratulations. Last time you spoke, you had called for a Biden election victory. Not a lot of people believed you at the time, but you turned out to be right. So what's your initial reaction to how he's progressing with his plans on how to rebuild the economy so far?
Well, there's no surprises there. It's exactly what you would expect, but it's not a stimulus. It's a sedative. What stimulates the economy is less government. I mean, government is a big impediment to economic growth. The bigger the government, the less growth there is because government has to be supported by the economy. And so it's a burden. It drains the economy of the resources that it needs to grow. And so instead of really stimulating the economy by liberating it from government, Biden wants to, turn up the pressure by making government bigger and more expensive. So this is bad news for the economy. All that's happening is more money is being printed and being spent. That is not going to grow the economy. That will stifle it further. What's going to grow is the cost of living. It's going to get higher and higher. Prices are going to go up as the dollar loses purchasing power due to all the new money that the Fed prints to monetize all the debt the Treasury sells to finance all this spending.
I had this discussion with a friend of mine the other day. Suppose they give out, $2,000, which is what Biden's proposing, I think $1,400 plus the initial $600. So suppose it's a one-time payment of $2,000. Well, there's people on both sides of the debate. One, people need that money now because the economy still hasn't recovered. On the other hand, like you said, it's not incentivizing people to work. What if they have universal basic income, Peter? Do you agree with that notion? Let's say they give out $2,000 every month, not just a one-time payment, every month. Would that do anything?
Well, it would push up prices. I mean, you have to remember there's a big difference between people earning money because they're productive and they're contributing goods and services to society, and people who are just spending money that the government prints. Just because people need money doesn't mean the government can provide it with them. If you need money, you have to provide goods and services in order to earn that money. But when you just print money instead of letting people earn it, all that happens is that the prices go up. And that's what's going to happen. And if the U.S. sends everybody $2,000, they're just going to go and buy stuff. But where's the stuff coming from? They're not helping to produce it. It's just going to run up the trade deficit, which is already at a record high. That's another thing I got right about Trump. He promised to shrink the deficit and win the trade war. I said that we would lose the trade war, and we did. Our merchandise trade deficit is the highest it's ever been. Our trade deficit with China in particular is at an all-time record high. And so if we just take these stimulus checks and buy more goods manufactured in China and other places, it just increases the trade deficit, puts more downward pressure on the value of the dollar and upward pressure on the prices of all the goods that we're buying.
This is a good point you brought up, prices. I like to ask you why inflation is not as high as maybe it should be, because the latest PPI, the Producer Price Index, just came out lower than forecast at 0.3%, I think was the latest reading. The forecast was 0.4% for December. Do you think this is, first of all, the accurate measure of inflation? And second, why you think this number isn't as high as people thought it would be?
Well, first of all, I don't think it's accurate. I mean, look at the import-export prices that just came out yesterday. They jumped by basically 1% in a month. Look, the government's inflation figures have never been honest. I think the metrics have been deliberately designed to obscure how high prices are actually rising. I think they would be rising much faster if it wasn't for the rest of the world bridging the gap between what we produce and what we consume through trade. But I think that's coming to an end. The Chinese and our other creditors are no longer buying U.S. treasuries. In fact, I think they're selling. So the subsidy that Americans have enjoyed from foreign producers and savers is going to go away. So I think we're going to start to see much bigger increases in prices at the consumer level. How much of those increases get captured in a rigged CPI, it's hard to say. But you can already see commodity prices hitting 5-year highs across the board, whether it's industrial metals, whether it's agricultural commodities. I think by the end of 2021, we could see all of these commodities at all-time record highs. Meanwhile, interest rates are moving. They're still low, but they're moving up. And I think they have a lot further to go. And unfortunately, I think the Federal Reserve is going to do everything it can to prevent rates from rising because we're too broke to afford to pay. And that means they're going to have to crank up the presses even more, which will put even more downward pressure on the dollar and upward pressure on inflation, which is the reason that rates are rising in the first place. So this is going to be, a death spiral of inflation.
So, Peter, the dollar is declining, inflation's going up, we still have monetary stimulus, interest rates are low. Why is gold still flat?
Yeah, well, remember, gold rose above 2,000 earlier last year, so it hit a record high. It's now around 1850. I think it's, building and consolidating for the next leg up. As to why that leg hasn't already begun, I think you have a lot of traders who are still, using a playbook that really is irrelevant. They're looking at the rise in interest rates and somehow thinking that's bearish for gold. They're looking at the pickup in inflation and think, that means the Fed is going to be raising rates. And they're trying to discount that tighter monetary policy into the gold price. And I think that's completely ridiculous. The Fed is not going to be raising rates. It doesn't matter how high inflation goes. They're not going to fight it. They're simply going to stoke the fires. And, people are moving to other metals. They're moving to other commodities and, they're not being distracted by the backup in rates. So I think this is just a short-term phenomena. I think gold is getting ready for a tremendous move because in reality, if you're worried about inflation, gold should be the main commodity that you buy because as inflation pushes up the price of all commodities, it's hard to store wheat or corn or oil or, live cattle. So if you think you need these commodities in the future, it's not that easy to stock up on them today. But what is easy to stock up on is gold. And gold is a store of value. It has historic relationships to all these other commodities. So if you're worried about a big increase in prices because of the valuation of money and you want to protect your long-term purchasing power, you would be buying gold. So gold should be reacting even faster than other commodities. And so it hasn't thus far, but I think it will.
I know what you're thinking. I'm going to say it for you. Gold hasn't risen because what Bitcoin has risen, right? Is that the other answer that you were thinking, or no?
Well, I don't know how much buying that might have gone into gold went into Bitcoin instead.
Yeah.
I think it's, very little, as far as the size of the gold market. Maybe it's significant to the Bitcoin market, but I think it's kind of irrelevant to the gold market. What I do think may be happening, though, with the Bitcoin story, which is centered on the false belief that Bitcoin is digital gold and is going to replace gold. That's, part of the spiel that they use to try to sucker people into buying it, right? That's the Bitcoin story, that Bitcoin is gold, but it's nothing like gold at all. It has absolutely nothing in common with gold. But to the extent that some people that really don't understand what gold is, who maybe are in the institutional space, maybe they would be buying gold. But because they believe that maybe gold's future is being impacted by Bitcoin and that, maybe gold won't go up because Bitcoin will steal its thunder, it's possible that some institutions that otherwise might be buying gold maybe are not doing it. I don't think they're buying Bitcoin either. But to the extent that they think Bitcoin may replace gold, it may be a reason why they're not buying gold. And so maybe they're buying some other commodity, or maybe they're buying stocks or something else. But ultimately, Bitcoin is going to collapse, and any demand that it might have siphoned away from gold, is going to return to gold. The Bitcoin story, it's one of a bubble. It's, a modern day tulip mania. It's fool's gold. I've said that from the beginning. It doesn't matter that the price has gone up. I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise. My only point is that the price is unsustainable because Bitcoin itself has no value. It has no use. Yes, if people believe the price is going to go up and they're willing to buy it, well, the price will go up. But it only goes up if more people make the same mistake and are willing to pay an even higher price than the last fool. Well, eventually the supply of fools runs out and the greatest fool ends up as the bag holder. And maybe we're very close to that point right now. I don't know. I mean, I'm not clairvoyant, but I know a bubble when I see one. I got plenty of experience. And if it walks like a duck and quacks like a duck, it's a duck, and Bitcoin is the biggest duck of them all.
What if I told you this bubble is just going to keep getting bigger? Would you participate?
Well, it's hard to participate in a bubble when you know it's a bubble. Because it's if you don't know, well, then you can buy. But the problem is you never know when the bubble is going to pop. So it's difficult. There probably are. I mean, I think there are two types of people that are in Bitcoin.
What if I paid you? What if I said, here's a bunch of Bitcoin, can you manage it for me? You're a fund manager. What if can you manage my Bitcoin? Would you participate then?
I would be tempted just to sell it as soon as I had it. So it's like, as I said, I think there are two kinds of people that are in Bitcoin. There are the people who don't know it's a bubble and don't know it's worthless. And then there are the people who do know, but they don't care because, the price is going up and they figure they're going to get out before the bottom drops out. But I think that's a lot harder to do. I mean, people think that they could get out, but I think most people are going to be trapped. I think when it finally collapses, it's going to be very quick. And, the market has been conditioned, right? Every time Bitcoin drops in the past, it comes back, right? So they've convinced the hodlers to close their eyes and turn out the FUD. And so Bitcoin crashes and it comes back, and it crashes and it comes back. So people now expect that every time it crashes, it's going to come back. So what happens when it crashes and then it doesn't come back? It crashes again and then crashes again. But people are stuck holding and hoping. Ultimately, that's what's going to happen. I mean, all the money that people make in Bitcoin is simply going to be a function of the money other people lose. There is no actual value being created by Bitcoin. You can only make the money that other people lose. That's the nature of a Ponzi or a pyramid. And that's exactly what this is. It's got characteristics of both rolled into one.
Yeah. Well, okay. So you tweeted something very interesting recently, which I didn't know before, because everybody I talked to have told me that institutional money has been going into Bitcoin, and that's one of the primary reasons why the price has gone up. And I don't know if you agree or disagree with this.
Well, I think some institutional money has gone in. Obviously, there's been a couple of hedge funds that have gotten involved, and a couple of companies are involved. But as a percentage of all the institutions that are out there, it's tiny. But I think that it is being blown out of proportion, certainly by the Bitcoin community that wants to highlight this to try to help drive this narrative that all the institutions are coming and so you better buy, right? They're trying to pump it up. I think CNBC in particular, because I think they've been bought and paid for by Grayscale, which is their largest advertiser. And so I think their coverage is completely one-sided and biased, and they're trying to spin this false narrative that all these institutions are buying into it in order to, to pump up the price. So I think the people who are in can get out. I mean, that is one of the things that if you are big into Bitcoin, you need to make a lot of noise. You need to be very public about the fact that you own it. And you have to keep touting it because you need to get more people in, because that's the only way that the price will go up. I mean, a stock could go up because the company does well, because their earnings are going up, because they increase their dividends, or a commodity could go up if there's more demand for that particular commodity because it's needed for something in particular. Like silver, let's say there's more demand in the automotive industry, or now maybe, in some certain businesses now need it more, or maybe there hasn't been as much mined. So there are different things that can happen with supply and demand. But Bitcoin it doesn't generate any earnings. It's not used for anything. So the only demand comes from speculators. And so everybody who owns it has a built-in incentive to try to encourage more people to enter the market as a speculator. So everybody that owns it has to talk their book, and they have to attract in new people to buy because that's the only way they can sell.
My final comment on Bitcoin, and we'll move on to something else. Doesn't that, what you just said, doesn't that simplify the equation for you? Because if all it is a demand-driven product, and you know that there's a big number of people, like a large community of people who would almost religiously buy into this product. That's all you need. That's a bull case right there, isn't it? Because they're not going away anytime soon.
Well, it depends. They're buying into a dream. It's a myth that you're going to get rich simply by hodling Bitcoin. Now, yes, people who did buy Bitcoin early on and rode it all the way up, they did get rich. The people that get in early are the ones that get in rich.
Yeah.
It's the people that get in late that enable those riches that get out poor. Now, there are a lot of people that think that buying now is still buying early. This is preposterous. Anybody who thinks they're getting in on the ground floor or anywhere near the ground floor, everybody knows about Bitcoin. Everybody's talking about Bitcoin. So you're not stumbling in on something brand new when you're buying it now. I mean, in fact, I was watching on the CNBC yesterday, and just about every single anchor all day was convinced you got to buy. You can't lose. Even if the price goes down, it'll come back up. It's a no-brainer. Buy it. You're all going to get rich. So this is how bubbles end. This is not how they begin. We're much closer to the top than the bottom, not only in price probably, but in time. I mean, this is like a parabolic. Look at that move up that we've had, right? I mean, this is not a sustainable move. There's never been a market that's moved up like this that hasn't come crashing down, including Bitcoin. Look what happened to Bitcoin in 2017. It went way up, and then it was down 70% in 2018. I think the odds are much better that we have a big drop in 2021, like we had in 2018, than another big move up.
Let's talk about the other bubble now, Peter. Stocks. Well, first of all, do you think stocks are in a bubble? Like, I'm gonna bring up an example. I brought in Harry Dent, whom I know you're acquainted with, and he argued for basically the opposite of what you said. We're going to have a deflationary environment, and the stock market is going to pop. He argued it was a bubble. We're going to go down maybe 40% this year, not recover for a long time. Where do you stand on this debate? Where are risk assets headed in 2021?
Well, first of all, I think the dollar is a risk asset. Everybody thinks it's a safe haven. So
I think the bond market would disagree with you, Peter. The bond yields are up.
Yeah, but the bond market is being manipulated by government.
Okay.
I mean, there's not a fair market there. I mean, if it was a fair market, bond prices would be crashing. But the government rigged the market by intervening and buying bonds. But look, I don't think the entire stock market is a bubble. I certainly think that there are a lot of stocks that are in bubbles. But I think there are a lot of stocks that are going to keep going up, maybe not in real terms. Maybe if you price them in gold, but if you price them in dollars, yes, because the dollar is going to lose value faster than most stocks. But there are a lot of stocks that have been hyped up that are trading at prices that are so far out of proportion to any underlying value those companies are likely to have based on what they're likely to earn. So I stay away from these stocks that have ridiculous pie-in-the-sky valuations. I want to buy real businesses that I think are going to do well in the economy globally, as I think it's going to evolve over time. And I think it's going to be an economy where America is a much smaller part. I think Americans are going to be diminished in their wealth and purchasing power and stature as the dollar goes down and we move more towards a socialist model than a market-based economy. The dollar is going to go down. U.S. assets are going to be out of favor. I think the emerging markets are going to shine. Standards of living are going to be rising in those countries that have more free market capitalism, more savings and production than the United States. Their currencies are going to rise. The living standards of their citizens are going to rise. The relative values of their assets are going to rise. So I have investments in stocks in emerging markets and developed markets that are going to benefit from this change of trend. We own a lot of commodities. We own gold and silver. We own the mining stocks. So I think we're investing for the world the way it's going to look. Most people are still looking in the rearview mirror, and they have no idea what's ahead.
Are there certain sectors you think will outperform this year?
Yeah, well, look, I think value is really starting to come back into vogue. I mean, people have been chasing momentum. There's still a few momentum stocks that are getting the flows, but I think, a lot of that is now moving towards better value outside the United States. I mean, you can already see that in the assets that we own. I mean, we're outperforming the S&P nicely so far in 2021. Interestingly enough, it's not my gold stocks that are doing it. It's all my non-gold stocks. Mm-hmm. Even though the story is more bullish than ever for gold, enough people just don't really get that yet. But I think they will. And I think ultimately it's my gold stocks that are going to end up being my top performers. But for now, it's pretty much everything else that's doing really well. And the gold stocks are lagging a bit.
Do you own any tech stocks?
I do own some, outside the United States, but I mean, most of my positions are not in that sphere because the valuations tend to be very rich. And I am a value guy. I'm looking to buy stuff that's out of favor, that's cheaper. I like good dividends. And so, you don't really find that as much in the tech space. But I do have some stocks that, that are playing into the theme of green energy and electric vehicles. And some of these stocks have really, really done well over the last year or so. So
that was my next question. Green New Deal. What do you think of that? Is that going to boost up copper, nickel, silver, all these base metals? Is that going to help with green energy stocks? What are your thoughts there?
Yeah, well, look, it definitely can't hurt. I mean, it is going to help push up oil prices because I do think the Biden administration is going to increase the cost of domestic production in oil and gas. And, so I think that oil prices are headed a lot higher, and we're not going to have the type of production that we had when Trump was president. And so that means $100 oil, which I think we could have again this year. I mean, we're still in the low 50s, but I would not be surprised to see $80 to $100 oil by the end of the year. The difference this time is going to be we're going to be importing all that oil. We're not going to be producing a lot of it ourselves like we were before. A lot of money was lost in the oil and gas sector in the United States during the last fracking boom. So the bust is not going to be replaced by another boom. But I think the Biden administration will make it even more expensive to drill and explore and produce. So that's going to be cut down. Yeah. But the Green New Deal is going to be a drag to the extent that any of it is enacted. It is going to hurt the U.S. economy. It just makes a weak economy even weaker to have to cripple it with all these new rules and regulations. And to the extent that we make the cost of energy higher than it otherwise would be, we simply make the U.S. economy even less efficient and less productive, and we're more reliant on the rest of the world. And the rest of the world is going to be less and less willing to subsidize our consumption because we keep buying their stuff with depreciating dollars that at some point are just going to completely collapse.
Yeah. Okay. So my final question to you, Peter, we started with policy. I like to end it with policy. Look, you don't agree with Biden's fiscal stimulus. You don't agree with the universal basic income. What would you do if you were in office? President Schiff, what would President Schiff do to pass legislation to make American lives better?
Well, you know what? We don't need any new legislation. We need to get rid of all the existing legislation. So if I was president, I would just veto everything. It's interesting that Donald Trump vetoed fewer bills. In fact, if you want to find a president that vetoed fewer bills than Trump and who served a full 4-year term, you have to go back to like the 1880s. So Donald Trump pretty much rubber stamped every spending bill that hit his desk, right? You can't drain the swamp, without draining the money. Right. But he continued to fill the swamp with money. So I would veto everything, including, raising the debt ceiling or any of these continuing resolutions. But I would want to dismantle government. So I would use my executive power to eliminate as many laws and regulations and taxes as I could, as president. But by vetoing all the spending, to the extent that I could get, a small portion of one chamber of Congress to sustain my vetoes, then I would force the government to cut spending because they wouldn't be able to get into the spending passed. And I would, of course, use the bully pulpit of the presidency to really articulate to the American public why we're in so much trouble, how their past presidents and politicians have destroyed the economy, and what needs to be done to enable Americans to rebuild what their government destroyed. But there is no solution that's going to come from government. All the solutions are going to come from the people, from the free market. We need people working, producing, and just the government has to get out of the way. But a lot of damage has been done, and we have to acknowledge that.
Yeah.
And we've got to bite the bullet and accept the losses. We just can't keep blowing bubble after bubble and try to pretend that those losses aren't there by making all the problems bigger and ultimately making the day of reckoning that much worse.
You ever thought about running for office?
Well, I did. You remember I ran for Senate in Connecticut, but, I didn't win. But look, it's hard to win with the truth. That's the problem with democracy. I mean, usually the guy promising to steal the most money is the big winner because, he's promising to give it to the voters. Look, this last election in Georgia was all about those $2,000 checks. Vote for me and you get a $2,000 check. That's why so many people voted Democrat, because they wanted $2,000. They said if you vote Republican, you don't get $2,000. You vote Democrat, you get $2,000.
Yeah.
Well, most voters would rather get $2,000 than nothing. So they voted Democrat. So look, it's hard to win in a battle of free stuff. My message is freedom. I'm not giving anything to anybody because the government doesn't have anything. All the government can do is steal from one person and give to somebody else. But see, I think theft is wrong. I don't want to steal from anybody. I want to protect everybody so that people don't steal from them. Just protect their liberty, protect their life, protect their property. That's what government's supposed to do. It's not supposed to try to micromanage the economy, which is unfortunately what our leaders are trying to do, but they're following the blueprints of the socialist economies. And, you can see how every time that's been tried, it's failed. It's unfortunate that we keep repeating the mistakes of the past instead of recognizing what did work and allowing that to continue, which is free market capitalism.
All right, let's follow up on that another time. And if you ever do run again, let me know. Thank you very much, Peter.
I guess I will. If I do run again, I'm going to have to self-finance. I didn't like the campaign finance, and I put a lot of money into my initial campaign, but I also raised a lot of money. But if I do it again, I pretty much will need to pay for it myself. So, which I might be willing to do. But, I guess the presidency is more expensive than running for the Senate. So gold prices are going to have to be a lot higher before I can finance my own presidential campaign.
Yeah. Would you still be able to run your business if you were in office?
Well, look, I don't know. I mean, I guess, look, Donald Trump had a business. Maybe I'd have to win and then see, but I'm not going to speculate because first I got to win.
Yeah. All right. Okay. All right. Anyway, Peter, thank you very much for coming on the show. We'll speak again soon.
Sure. Okay.
Thank you for watching Kiko News. I'm David Lin.